fundsupermart.com.
Hi Sujal, how has your portfolio performed in 2012?
Okay, when I looked at the fund analysis feature inside the View Holdings website on Fund Supermart, it's up about 14.5% over the last 1 year. Then over the last 6 months, up about 10%.
What main changes did you make to your portfolio in 2012 and how have you positioned your portfolio for 2013?
Okay, what I've done recently is earlier part of the year I actually went 100% equity. So actually it's been a fairly good year for equities. So now although I'm still overweight equity, I'm shifting back to slightly less than 100% equity type of asset allocation. So although actually a lot of the funds are all in the black and have done well by being 100% equity, I've actually taken profit from some of my Asian equity funds. So I've actually shifted in total about 50,000 into bond funds. So that makes up about 10% of my total portfolio. So about I'm 90% equity, 10% into bond funds at this point in time. All the 10% was into just one bond fund, the Lion Global Asian Bond Fund. Generally because although I'm still positive high yield and emerging market bond, but I recognize that being 90%, allocated into equities already make my portfolio very aggressive. So the proportion I want in bonds, I don't necessarily need it to give extremely high yield or high kind of returns, which is what sometimes we are more aiming towards when we go into emerging market bonds and high yield bond funds. So Asian bond funds are one step down in terms of risk, much more stable also compared to high yield and emerging market, which is why the 10% I put into Asia also. Because at this point in time, I don't really like sovereign debt, so I don't like US debt, don't like Europe debt as well. So Asian bond fund was where I actually put it in terms of the bond funds which I position my portfolio for 2013. Within the equity space, still very much overweight Asia, but the exposure into US has increased as well. And what I've done is also shifted some of the US equity towards this still US equity, but now Sing dollar hedged. Because the last 1 or 2 years, Sing dollar has remained strong, and it will continue to happen. Although US has averted fiscal cliff, the very act that they've averted fiscal cliff means that most likely they either have to raise the debt ceiling, continue to print more money, and become even more in debt. So there will probably be more money flowing towards Asia as well, because generally Asian currencies should see a strengthening as a result. In particular Singapore, because inflation is still quite strong here, quite high here. So MAS is probably going to continue its policy of keeping the Singapore dollar quite strong. Because of that, I don't want my returns to be eroded currency-wise. So it's rare, but for US equity in particular, I have actually shifted from some of my pure US equity funds into a US equity fund, but which is Sing dollar hedge, because I want to preserve the returns in Sing dollars. So these were probably some of the main things. Okay, the third thing I did to my portfolio was to streamline it a little bit. So it had it had quite a lot of funds, some of which were into single country like Russia, that kind. So I didn't really see any reason to continue having exposure into Russia in particular, because I feel that generally oil prices should remain relatively stable this year. So it shouldn't be an issue. I don't really think I need a hedge, just in case oil prices shoot up in particular. So I liquidated the Russia position. Then I also reduced the number of Asian funds in my portfolio as a part of the process of streamlining. So quite a few changes, but overall these were the broad directions which I wanted to position my portfolio. So still overweight Asia, but now I've taken some profit to put into bond funds. Not because I'm negative equity. Actually, I think it'll be a good year for equity this year as well. Just that from a general asset allocation point of view, it's part and parcel of also forcing yourself to take some profit as well.
What investment ideas are you currently overweight on?
Okay, generally, right now, I continue to be overweight Asia. Also, within my portfolio, I'm overweight North Asia. because other than the Asian equity funds which are overweight on a regional basis, on a single country fund, I actually have Taiwan, Korea, as well as China. So I'm quite overweight this North Asia relative to Southeast Asia, because the Southeast Asian equity fund that I had, I also liquidated it already. So in addition to that, I also have a fair amount of exposure into Asian small caps as well. In fact, my Asian exposure, the two regional Asia funds I have, one is Aberdeen Pet Equity, the other will be Aberdeen Smaller Caps. Because I also feel that this year should be a good year for stocks. Smaller caps should actually run more compared to the large caps also. I'm actually quite heavily overweight in terms of smaller caps as well, relative to the blue chips. Basically, that would be some of the main positionings. Then just now I also explained the Asian bond fund reasoning to why I actually have. US is another one where I actually, now it's averted fiscal cliff. I expected it to avert. Generally what's going to happen is it's going to continue to recover, the US economy. So that should bode well for US stocks in general also. So on a regional basis, I think I have 5% in Japan, but I'm relatively comfortable with the relatively higher US equity exposure. I would say that over the last 10 years, this is the highest I've ever had in terms of exposure to US. Although on an overall basis, I would still be heavily overweight Asia. So I'm underweight Europe, I'm underweight Japan. I think there's no hurry to rush into Europe, although I do think Europe has actually bottomed out already.
On the other hand, what investment ideas are you underweight on?
Okay, if underweight means I don't even have them at all, but generally at this point in time, I don't have any Thailand, liquidated earlier. I don't have any Indonesia, also liquidated, and whatever Indonesian equity funds I have earlier on already. So Southeast Asia, not that it will crash or anything, but we think North Asia will actually outperform. So all the individual Southeast Asian funds, whether it's Thailand equity fund or Indonesian equity funds that I used to have, I've already sold them off and I don't own any already.